Wonderful good day, ladies and gentlemen, and we are still in Zurich at the Dolder Grand Hotel today with the European Gold Forum, and with me here is Metanor Resources, the junior gold producer out of Canada, and Ronald Perry, again, the Vice President and Treasurer. We had the pleasure already to talk at the Cambridge House show in Vancouver, is here with me, and yeah, we want to talk about your terrific company, of course. Ron?
Thank you very much for having me.
Yeah, thanks for that you are here. First of all, last year was a great year for Metanor because you set up the whole thing, you started production, it's all fine. What were the highlights of last year, first thing? And the second thing is, of course, can you comment on Q1 already?
Okay. For last year in 2013 as a calendar year, because we are a June 30th year in, but for a calendar year, the biggest highlight for 2013 was the declaration of commercial production in the month of November, effective for accounting purposes, December 1st. Yes. So moving forward from there, because we had 1 month of production in our second quarter, but the last quarter of calendar 2013, we provided our cash cost. And as you said, what have we done? Well, listen, we've, in all our PowerPoints for more than a year, we've said we'd have $800 cash costs. We produced $766.
Great.
So, from a point of view in this industry, a lot of people have not been hitting the numbers. We hit the number.
So you've done what you said.
We've done what we said. Now, we've also said for calendar 2014, which we're in, that we will produce 50,000 plus ounces. So the last quarter in 2013, we produced 12,700 and change, and we produced 12,600 recently. So we're now on target here. So we are going to do 50,000 plus ounces, and that's the guidance we're providing, and we're very comfortable giving that. So we will, again, hopefully tell the street what we say we are going to do. So now the next thing is we are now starting to talk about all-in costs, because we've got a little bit more history.
Would be my next question.
Yes, and we're going to, but we don't have our Q1 numbers yet. They'll be published at the end of May. But we are, and at the Gold Forum, we provided the guidance. We said our all-in cash costs, Canadian, are $1,028. So that's just over 900 US. So we're very comfortable compared to our peer group. That's a very good cash cost. And then compared to our majors, that is a very good all-in cash cost. So we're now executing the plan. The next thing is to get the resource up. And we recently announced a drill hole 800 feet below the last level, and that was holding gold. So the structure is intact. So the future looks very good for Metanor.
Perfect. And also, I think what is maybe important to mention, you are earning money with those numbers.
Yes, but we have significant cash flow requirements on the way out. But it's an investment. You have to, we said, do we cut back on drilling? Because that's the major expenditure over than operations. But we went through our operating team, we went through our geological team, and they said, you cannot. You have to stay ahead of the resource. We have 200,000 ounces in reserves. So that's a 4-year mine life. In Abitibi, that's a lot. A lot of the mines started 2 years. Sigma ran for 75 years. Other mines opened with 2 years, 3-year mine life, and they're still open after 25 years. So it's the nature of the beast. But people in this industry want to be confident that you're open forever. But you have to look at Abitibi. Structures run deep. They're at 8,000 feet. And again, as I said, we're at 2,400 feet. So again, we're very confident. So we are doing 56,000 meters of drilling underground at Bachelor for the next 12 months. So we're not cutting back. So it's a significant investment, but we thought we could cut back. We cannot.
Yeah, don't do it. Okay, perfect. So that sounds like a lot of news flow for the future.
Yes.
Where do you see the largest challenge for your company in 2014?
Well, I think the largest challenge was done already. The fact is to get it into production and get it up to 50,000 ounces. Next challenge is to maybe try to tweak it to 55. Our objective in our PowerPoint that we showed here at the Gold Forum is 13,700 per quarter. Multiply that by 4, you're at 55,000 ounces. Yeah. So 50 to 55,000 is attainable. But that's just going to be opening up a couple more workstations. The challenge is to continue to renew the resource that we pull out, because now we're a producer, so we're like a baby gold corp. If we pull 1 ounce out, and we don't replace it, your stock will go down.
You have a problem. Yeah.
So you have a problem. So right now, and we have great exploration. It's too bad I can't show some charts, but we've hit the structure at depth, but we're going towards Ufren West. The future looks very good. We also now know that the A vein appears to go to surface. That was never known because the previous owners, when it was operating in 82 to 89, they never knew about the A vein. So the A vein will be accessible by all the upper levels. So that is very good news because you don't have to build the infrastructure, it's already there. It's, you know, right now we're operating on levels 10, 11, 12, 13, and 14. But the old levels will have access to, in the future, to level A. So we're opening up structures, proving up resources. We think there's another 300,000 ounces. We have, you know, all categories right now. Our resource, our reserve, is 300,000 ounces. But we think we're going to double that in the next year or so.
Great. So you're growing the business. You're going forward.
Correct.
Let's touch shortly the financial situation. What is still cash in the bank? I would
Yes,
say.
yes, so
What is the debt situation? You know, all those little things.
It's
Are you safe? I would say.
It's delicate. It's always delicate. Then you have to look at the future. Now, the future is money. Even though it's at low valuation right now, if you raised even some money now, it's what you would do with that money. $3 million is not a lot of cash in this business. If something goes wrong, which you never know, I mean, things happen, that's not a big security blanket. So there's a lot of things here, and we're looking at, you know, a lot of warrants have expired, all the options are out of the money. So we've done a pretty good job of controlling dilution. Now it's a question of, we'll watch it as we go here. But it's a delicate situation. We feel if gold goes up, obviously, then it's a no-brainer. We don't need any more money. Gold goes down, we have to look at it. But what are we doing with that money? If I'm doing an extremely aggressive drill campaign, that's good for the future. If you're doing just stuff to augment working capital, there's no return for the shareholder. Right. So we looked at cutting that cost. So we're looking at a lot of things, and we're monitoring the situation day to day. That's for sure.
Perfect. Well, great, Ron. Thank you very much for that, and I think we look forward to your Q1 numbers. As of course you cannot elaborate on that, but
I think I give a little bit of guidance already.
Of course. And when I see your smile, I have the feeling that you are satisfied with it.
Oh no, but you know what? I will add that we're production is going very well, and the life of mine is a high 6.5 to 7 grams. In the recent week, we're diluting up because we have one stope, the 1403 stope, and it's very rich. It's almost an ounce per ton.
Oh, that's a lot.
Yeah, and we're using 30% of that, and it's bringing it up. We're putting 12 to 13 grams in the mill per day.
Oh, wow.
Recently. It just shows that when you want to tell the shareholders, is the future look good, and does 7 grams look good? 7 grams looks good.
Definitely. Great. Thank you very much, Ron, and all the best for that, and we look forward to your announcement.
Thank you very much.
Thank you. Ladies and gentlemen, it was Ronald Perry, the Vice President and Treasurer here of Metanor Resources. Yeah, you heard it. They brought it into commercial production last year at December. All is going well so far. The numbers are coming out. Of course, he cannot comment that in detail about it, but we have the feeling that all looks good. And production is growing. It's going forward, and they hit their guidance about the cash cost with $766. So all looks good. Let's hope that the gold price is not breaking down again as it has to rise. Thanks, and bye-bye from Zurich.